What is the best dividend stock for 2019? Well, we're going to go over 5 dividend stocks today, and I believe all 5 of these companies are excellent holds for 2019. Hey guys, if you're new here, subscribe down below and don't forget to hit that bell notification as well so you don't miss any new videos like this. And guys, if you do enjoy these kind of videos, make sure you drop a huge like on this video. It does help out the channel quite a bit, and I do appreciate all the support from that. Let's aim for 100 likes on this video if possible, and if we can do that within 48 hours, I will release the 3 stocks I'm watching in January 2019 video. Now what I also want to do is make a follow-up video of favorite dividend stocks 2019, but kind of a viewer's choice version of this. So let me know in the comment section down below as well what your favorite dividend stocks are for 2019, and I'll compile a list here and I'll make a new video on that as well. So when looking at pure dividend stocks, there's really 2 things that I look for in these stocks. The first thing is that it has to be a pretty stable company, ideally a blue chip company, and they have to have been paying a dividend for at least the last 5 years, ideally the last 10 years. The second is I do want to see at least a 3% dividend yield return, ideally more of a 4 to 5% dividend yield, but that really depends on stock market conditions. I believe in the current conditions, something around 3% or above is pretty good value. What I also try to do for this video is to pick 5 different companies in 5 different sectors, so you will kind of get a lot of diversification here if you do choose to only go with these 5 companies for your portfolio. Anyways, the reason that I have these 2 criteria set is to kind of set my expectations at a reasonable level for these stocks. Generally, dividend paying stocks don't appreciate as much in capital as growth stocks. And this is typically because investors see dividend paying stocks as a lot more stable, a lot more safe type companies. Typically, these kind of stocks are seen as blue chip companies, safe companies, and they've been paying out a dividend for a very, very long time, which is why investors absolutely love these companies. And typically, you'll see a lot of these companies paying out a dividend for 25 plus years and raising those dividends over a majority of those years as well. So as a result, over time, you can pretty much solely build a strategy just around dividend stocks and eventually have your income come in purely from dividend paying stocks. So another excellent financial YouTuber that I've personally been watching, and I highly recommend if you haven't heard of him before, is PPC Ian. I believe he is the best channel on YouTube for dividend stocks, and you can learn quite a bit from watching his videos. If you haven't checked out his channel yet, I will leave a link in the description below. So if you do check him out, if you do find him from this video, let him know that I sent you there. Okay, so now that our expectations are set, I know this was kind of a longer intro, so I apologize for that. But let's get into it. Let's look at 5 dividend paying stocks that I believe will be the best value for 2019. I'll also include in these picks what analysts think about these companies, so you can kind of see what potential upside could be there for these companies. But take that with a grain of salt. Remember, analysts aren't always correct, but it is something to consider when you are looking at these stocks. And as always, I will leave a link in the description to each one of these companies on TipRanks if you're interested in learning more. But either way, the first company that we have here is General Mills, ticker symbol GIS. So these guys pay out a 5.24% dividend yield, which is one of the higher dividend paying stocks here on this list. They're a well-established company. They own brands like Cheerios, Haagen-Dazs, and most recently Blue Buffalo. And therein kind of lies the problem. Their recent acquisition on Blue Buffalo is kind of what's causing a lot of negativity in the stock in the short term. So investors kind of feel overall that General Mills overpaid for this acquisition in Blue Buffalo, and they may not see the returns they're expecting to see from the acquisition of this company. So I would say this is kind of the main reason why General Mills has been suffering for the majority of 2018 and even 2017 as well. But as a dividend investor for the long term, this presents a very attractive option here where you can get a world-renowned brand with a dividend yield of over 5%. So if you don't have any exposure to the food space like cereals, that kind of stuff, and you wanted some exposure in that space, General Mills seems to be a very solid pick here, especially if you believe that the Blue Buffalo acquisition will help them penetrate the pet market as well. Analysts, as you can see here, see quite a bit of upside in General Mills as well, with around 30% from its current prices, and that kind of hints to us that it may be undervalued at current prices. If you're not a big fan of General Mills, I would say another honorable mention here for dividends in this space would be Kellogg's. They pay out a smaller dividend of around 3.7%, but they are also a well-established company and a well-established brand out there. So that's another one you could look at if you want some exposure to the space, you're not a huge fan of General Mills and not a huge fan of their debt and the recent Blue Buffalo acquisition. Okay, the second stock here is PepsiCo with a 3.26% dividend yield. So this is one of my personal favorite companies, and I did make quite a few videos talking about PepsiCo when it was around, $100 mark or so, and I believe this is a very, very attractive company to own for the dividends. Now, one thing a lot of people mistake with Pepsi is that they just think of the Pepsi Cola. PepsiCo owns a lot more than just the cola. They own snacks, they own other drinks. They're really a pretty large brand here with a lot of diversification in the food and beverages space. So some of the popular drinks that they own apart from Pepsi would be Gatorade and Tropicana, and some of the popular snacks that they own include Lay's and Quaker Oats. I really love how diversified they are in the snacks and beverages space, and I love that they've recently been pushing into the healthier snack space and healthier beverages space with acquisition. So this is kind of a big reason why I think Pepsi is a great hold for the long term. And this is also kind of a main reason why I would pick Pepsi over Coca-Cola, because I see Coke as kind of just a pure beverage play, whereas Pepsi is not only in the beverage space, but they're also in the snack space. So there's a lot more diversification, a lot more safety there with that stock. So as you can see here, analysts feel that Pepsi is pretty much fairly valued right now, but I think as we go into 2019, we'll see a lot more upgrades in the stock, especially if volatility continues here in the market. PepsiCo is seen as one of those safer recession-proof stocks. So as you can see, 2018, especially towards the ending of 2018, a lot of stocks have suffered and lost quite a bit of their market value, whereas Pepsi has actually been making new all-time highs recently. So this is kind of a stock that I think will continue to do well in 2019, especially if the volatility continues. So coming third on our list here is Pfizer with a 3.11% dividend yield. So this kind of shifts our focus now to a different segment altogether. It's a healthcare player, and it's one of the largest healthcare players in the world. They produce tons of different medical products for consumers, and they've established themselves as a very trustworthy brand, and they've been around for almost 170 years. The stock is typically a very slow mover. People don't typically buy the stock for capital appreciation, but their dividends are usually what attracts a lot of investors to the stock. So Johnson & Johnson is another huge player that a lot of people look at in this space when they're considering a healthcare stock for their dividend portfolio. However, even though Johnson & Johnson has taken a 10% hit the last week, Pfizer still provides a higher dividend yield compared to Johnson & Johnson. They also, in my opinion, target different segments of the market. Johnson & Johnson focuses more on babies and baby products, whereas Pfizer focuses more on adult products. Analysts here believe that Pfizer is pretty close to its fair value with a potential 5% upside. So there's not much to see here, and like I said, this isn't really a stock that you'd hold for capital appreciation, but it is a stock that you will hold for dividends and dividend growth over the long term. Coming in at number 4 is another stock that's in a completely different industry here, but it's still a very large, well-recognized brand and company, and that's JP Chase. So these guys pay out a 3.19% dividend, and they're one of the largest banks in North America. Now I figured this list would not be complete without a banking stock, and what better banking stock to pick than JP Chase in my opinion. They're a very strong brand, very strong company, and they're usually kind of a fan favorite when looking at a banking stock, especially for newer investors or even seasoned investors who want to pick a very stable bank. They're led by a very respectable CEO, they have strong fundamentals, and their stock has been performing pretty well over the last few years. To be honest, I was extremely surprised to see that JP Chase was providing over a 3% yield currently. It's been a stock that I've been watching for quite a while. It's a stock that I've wanted to pick up for quite a while, and at its current price of around $100 per share, it is a very tempting play. So if you haven't noticed, there has been a lot of pressure on these banking stocks recently, and that is because the Feds may not raise rates as expected in 2019, and as a result, these banking stocks may not make as much money as expected in 2019. Now I believe if this continues and the Feds either keep the rates the same or for some reason lower rates in 2019, JP Chase will get hit pretty hard along with other banking stocks, but on the plus side, this will mean that their dividend yield will increase in 2019. Nonetheless, analysts here believe that the stock is also very undervalued currently, with over a 27% upside from its current prices. So there's currently a lot of fear, uncertainty, and volatility out there in the market, and banking stocks are one of those sectors that have been hit very hard recently. So going into 2019, don't be surprised if this stock continues to trend lower. But on the plus side, think of this, you will get a higher yield on these stocks. Other big banks, if you're not a huge fan of JP Chase, would be Bank of America or even Goldman Sachs. Both of them provide a 2.5-ish% dividend yield, but JP Chase still comes out with over a 3% yield, so I do believe it's the best value in this space. Alright, so closing off our list here, number 5 is a company that will be a bit controversial, and we'll go through why that is. But either way, they pay out a 6.07% dividend yield, and the company is called Altria. So out of all the stocks we've talked about today, I would say that this is probably the most riskiest company in the list. So Altria is a very strong, well-established brand in the tobacco space, but there is a lot of concern around this industry as a whole moving forward. They recently did enter the cannabis space, which could pose a lot of volatility for this company moving forward. Now, I don't want to get into that here, but in a nutshell, they did pay $1.8 billion to enter a stake in Cronos, which is one of the most popular stocks in that segment. So the most recognized brand that Altria owns is Marlboro. And if you're someone who smokes or you know someone who smokes, I'm sure this is a brand that you've either heard of or consume regularly. Now, this stock and this company is more of a moral dilemma, I would say, to a lot of people, because a lot of people choose not to invest in stocks that are harmful to people's health. Now, this is mainly due to ethical reasons, which I respect. And you just got to keep in mind, keep things in perspective. There's thousands of companies out there, and if some don't align with your moral stance and your views, don't invest in them, move on, look for the next opportunity out there. But for those of you that can overcome that and want to look more at the business side of this company, a 6% dividend yield is extremely attractive. This stock has been on the decline since around 2017, but that just means that the dividend yield has been getting more and more attractive as the months go on. Even a small portion of your portfolio in this company with a 6% yield could provide some pretty good upside for you over the long term. Now, on the plus side as well, analysts see quite a bit of upside here with this stock, coming in at over 34%. So if analysts are correct with their assumption here with this stock, not only would you be getting a 6% dividend yield on cost year over year, but you will also potentially have some pretty significant upside with your capital appreciation on this position as well. Also, like I mentioned, if you believe that their investment in Cronos was a good move for the company in the long term, this would be another big reason why you would want to enter a position here or start building out a position here in Altria Group. So that concludes our list, but remember, I do want to make a follow-up list here on your favorite dividend picks for 2019. So before you move on to the next video, make sure to comment down below and let me know what your favorite dividend stock is for 2019. I'll be reading every single comment and I'll be compiling a list of these stocks, so make sure that your voice is heard. But either way, guys, hope you enjoyed this video. Hope you enjoyed these 5 dividend stocks. Let me know if you do choose to invest in them. But either way, guys, don't forget to invest positively. Peace.